Hey everyone, today I'm going to talk about incentive stock options and more specifically how incentive stock options are taxed and how that can impact your tax picture. Now, unlike other forms of equity compensation such as ESPPs, RSUs, and things like that, stock options can have some additional complexities to them, which is why I want to break down from a high level what you can expect from a tax standpoint. Now, I wrote a blog about this that you can read below with more detail, but I'm going to cover a flowchart that I created to help you determine the taxation of your incentive stock options. So let's get started. Now, as you can see on my screen here is a blog post that I wrote about incentive stock options and the taxation of them. So if you scroll down, and you can read down, for this blog post has some good examples and things so you can determine the taxation of your incentive stock options. But what I really want to focus on is this flowchart that I created to help you determine the taxation of your incentive stock options. And if I zoom in a little bit so we can see a little better, and I'll move me out of the way here a little bit. A couple things that you want to be aware of with incentive stock options, and I put this at the bottom of this flowchart, is one, the grant date, which is simply the date you are issued those incentive stock options. Two, the exercise date, which is the date that you actually exercise those options. And then the bargain element is going to be really important. And that's simply going to be the difference between that price, that exercise price, and then whatever the market price is at exercise. So let's go through this flow chart so you can get a better understanding of how or what to expect from a tax standpoint. Now, first thing you want to ask yourself when you sell shares that are from incentive stock options is, did you sell the shares at least 1 year after that exercise date? And if your answer is no to that, then it's what's called a disqualifying disposition. And that simply means that you owe ordinary income tax on that bargain element. Remember that bargain element we just talked about? That you owe ordinary income tax on that. And then since you didn't hold it at least 1 year, then you owe short-term capital gains on the difference between that sales price and the exercise price. So next, let's say that you did hold the stock at least 1 year after exercise, and then you held it at least 2 years after that grant date. So if that's the case, that's what's called a qualifying disposition. And this is where the preferential tax treatment comes in for incentive stock options. So you don't owe ordinary income tax on any of that. However, you owe long-term capital gains tax, which is more favorable between that sales price and the exercise price. You could have been subject to AMT when you exercise that, but nonetheless, at this point, you could get an AMT credit, but you owe long-term capital gains rate tax, which is more favorable. So that's where the benefit sometimes with incentive stock options comes into play, that preferential tax treatment. Remember, long-term capital gain treatment is typically better than ordinary income tax rates. Now, the last scenario here that we'll look at is, did you hold the stock at least 1 year after you exercised it? So if you did that, and then did you hold the stock at least 2 years after that grant date? And if you didn't hold it 2 years after the grant date, but you did hold it at least 1 year after exercise, well, then you still owe ordinary income tax, just like the first scenario. You owe ordinary income tax on that bargain element. But in this case, since you held it at least 1 year after exercise, you're going to owe long-term capital gains tax on that difference between the sales price and the exercise price. So you can look at this to walk through your situation. The main thing is just understanding how you're taxed in various scenarios. You never want to have taxes be the sole decision maker whenever you're working with equity compensation and incentive stock options. First, you need to look at what works best within your financial plan, what helps you reach your goals, and then bring in the tax component to figure out how to pay less money to Uncle Sam and maximize your money. So if you need help walking through your incentive stock options or want to talk about strategy on how to save money on taxes and maximize your equity compensation, please reach out, read the blog. This blog has a couple more details in it that can help you out. But if you want to go into more detail, You can send me a message, get a hold of me through the blog. There's a link to schedule a meeting and have a strategy session if you want to. So hope this was helpful. Let me know if you need anything.